Hello everyone, welcome back to another tutorial video from our Chapter 9 exercise series of our Managerial Accounting course, ACCT 428. In this video, we're going to be working on exercise 9-12A. So let's read the exercise together. It says the Monarch division of All Good Corporation has a current return on investment of 12%. The company target's return on investment is 8%. So they are currently, this particular division is surpassing the target, right? The Monarch division has an opportunity to invest $4.8 million at 10%, but it is reluctant to do so because its return on investment will fall to 11.25% if they take this investment opportunity. The present investment base for the division is $8 million. So what's required? Demonstrate how All Good, being the corporation, can motivate the Monarch division to make the investment by using the residual income method. Okay? All right. So all we need to do here is figure out what's the current residual income and then figure out what would be the new residual income if Monarch division decides to take on that investment opportunity. And if the new residual income is higher than the current residual income, that would be enough motivation to convince the management of that division to take on that investment, right? So let's start with figuring out the current residual income. First, I will write down, just to remind you, the residual income formula. Okay, residual income equals the operating income minus the desired required rate of return multiplied by the operating assets. Right? That's the formula that we've been using. We're going to adjust that a little bit for this exercise because here we don't really have the operating income directly, but we can still figure it out, right? Because it is going to be equal to the investment base for the company, okay, multiplied by the return on investment for that particular division. Okay, so knowing this, let's see what we can do here. The current residual income is going to be the investment, which is $8 million, okay, multiplied by the return on investment of that division, which is the 12%. Okay, minus the desired required return by the company, which is 10% right here, or was it, 8% right here, okay, multiplied by the investment again, okay, so that's going to be 8% multiplied by the 8 million. Okay, now let's turn to our calculators and see what we get. 8 million multiplied by 0.12, that's 960,000. Let's just write that down again. Residual income equals 960,000 minus 8 million multiplied by 0.08, and that would be 640,000. Okay, which means the current residual income equals $320,000. Okay, we got this out of the way. Now let's see what would happen if Monarch Division decides to take on this investment opportunity. We're going to need those two figures to do so. Okay, and also we're going to need to know what would happen to the return on investment. Okay, all right. So here, using the same concept, just like we've done here, but we're going to adjust the numbers, right? So the new residual income is going to be the same 8 million, which is the investment base, plus the new amount that is going to be invested, the 4,800,000 or 4.8 million. Okay. However, now the return on investment is going to drop down to 11.25. Okay, so that is what we're going to use right here. Okay, minus, again, that same investment base, which is 8 million, plus the 4.8 million. Okay, multiplied by the minimum required rate of return by the company, which was 8%. Okay, so let's see what do we have here. And here, this is the residual income. Turning to our calculators, 8 million plus 4,800,000. That's 12,800,000 multiplied by 0.1125, which is 11.25%. That would be 144,000. Okay, sorry. Okay, so that's 1,440,000 minus 8 million plus 4,800,000 multiplied by 0.08. Now be careful here, because many students might, when they are turning from decimals to percentages and vice versa, they make errors. So the 8% is 0.08. Sometimes rushing, you might just type it in your calculator as 0.8, and that would cause an issue, of course. That would change the answer. So the result here is going to be 1,024,000. Okay. Subtracting 1,440,000 minus our answer in the calculators, that's going to be $416,000. Okay, so this is going to be our new residual income in case Monarch decides to take on this investment. Okay, so the original residual income is $320,000, whereas if Monarch Division decides to take on this investment, that would increase the company's residual income to $416,000, right? And based on that, the new residual income is going to be higher than the current residual income, and because of that, that's enough reason for the for the division to actually take on the opportunity. Okay, so because of that, you cannot just stop here. You need to add a comment to show that you understand what you've done, what's behind those numbers. So we could say something along the lines of taking on the investment opportunity will increase the company's residual income by, let's calculate the difference, 416,000 minus 320,000. That is an increase of $96,000. Okay, between brackets I will also show where did I get this number from, because I did not mention it earlier. So that's 416,000, the new residual income, minus 320,000, which is the current residual income. Okay, because of that, Monarch division should take the investment opportunity. You don't really have to write it exactly like I have, but this is one way to put it. As long as you understand the meaning behind the numbers that you just calculated, and you show that you understand that should be enough in your final exam. All right, I hope you found this video useful. This is how you solve a similar question, even though it's easy, but it does require some manipulation to the original formula that we have learned. So hopefully this video helps you understand what you need to do in a similar scenario. If you have any questions, please feel free to drop them down in the comments. And until I see you in the next exercise, inshallah, take care.